Where will Disney stock be in 1 year? That's the question I'm going to answer in this video, looking at several different assumptions and estimates and financial metrics to come to the conclusion of where I think Disney stock will be in 1 year. So let's go ahead and let's start this financial analysis.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right, of course, one of the first things we need to determine where the stock price could be is where the stock price is right now. And as of this recording, Disney's stock is trading at $93.07 per share. As you can see, this is down considerably off the recent highs of over $200 per share that Disney stock achieved in 2021. Surprisingly, Disney stock price achieved this high level when most of its businesses were shut down during the parts of the pandemic, when some of its theme parks were forced to shut down. And still, the stock price is half where it was back then, even though the theme parks are thriving. It's an interesting stock, and I'm going to talk a little bit more about those interesting scenarios for Disney. All right, so the next thing we need is Disney's forward price to earnings ratio, which as of this recording is 17.72. Again, this valuation is near the cheapest you've been able to get Disney stock for the last 3 to 4 years. Also, we need Disney's earnings per share expectations for the next year, and we're looking at the fiscal year 2025, which for Disney ends on September 2025. Yes, it's a strange thing that they are allowed to report fiscal year earnings that are not matching with the calendar year. So some companies, not all, will have fiscal years that end on days like September 2025 or July 2024, things like that. That's allowable under our code. However, it's confusing and it's annoying, to be sure. It would be better if they were all held to the same standard and they all had to report earnings as of a certain date so that we can compare companies on an equal footing. But it is what it is, and this is what we have. So for Wall Street analysts that are following Disney stock, they think its earnings per share will come in at $5.22 for the year that ends 2025. Importantly, they also think that Disney's earnings per share will continue to grow in 2026 up to $6.29. And so that would be up from $4.30 to $5.22 to $6.29. And you can see the story here. Disney's earnings per share have been rising and are expected to continue rising as it recovers from the devastations of the pandemic. So its profits are rising, its cash flow is increasing, but its stock price is decreasing. That's why Disney is an interesting stock, to be sure. Its stock price was exploding when its business was struggling and devastated because of the pandemic. And now that it's thriving, its stock price is falling. So it's one of the weird stocks in the market that has confounded investors for much of 2023 and now starting 2024. Although already to start 2024, Disney stock is performing better. So now let's look at the valuation prediction. So the earnings per share estimate for 2025, the $5.22, I got directly from this estimate here. Okay, that's what I have here, EPS for 2025. The PE forward of 17.8, I got that directly from its current valuation, 17.7. I rounded it up to 17.8. Perhaps I should round it back down to 17.7 to be more accurate. All right, so if everything goes according to plan for Disney in 2024, it is on pace to meet its earnings per share target for 2025. The estimated stock price could be $92.39 by the end of the year. Now you're probably saying, well, that wouldn't be much of a change, and you would be right. Disney stock is currently at $93.07. And so if we assume these estimates are correct, then Disney's stock price will be slightly down for the year. However, if investors become more enthusiastic about Disney stock and it trades at a forward price to earnings of 20 instead of 17.7, that could increase Disney's stock price to $104 per share by the end of the year. In an even more optimistic scenario where Disney's stock price rises to 25, price to earnings forward ratio rises to 25, that could increase the stock price to $130 per share. However, we have to also include a bear case scenario where things don't go as planned and investors become more disappointed in Disney and the stock price trades at a forward price to earnings of 14. In that case, the Disney stock price could fall to $73 per share in 2024. So several scenarios here that could influence Disney's stock price in 2024. You might be thinking, well, what's going to cause its price to earnings forward ratio to rise or decrease? That would be a good question, and that would include several factors that are primarily investor sentiment related. So if Disney were to perform better in 2024 and these earnings per share were to be shifted more towards its streaming segment and less from its legacy cable segment, that would make investors more enthusiastic about Disney stock. However, if Disney achieves these earnings per share because its legacy cable segment performed better, then investors wouldn't be too excited about that because investors are convinced that eventually Disney's cable segment is going to decrease significantly. Now, around 7 years ago, there were over 100 million subscribers to pay TV channels. That's now less than 75 million. And estimates suggest that will fall to 50 million over the longer term. So streaming is the future. It's proven. People like it. It's just fundamentally more convenient. Why would you pay for cable when you can pay for streaming and you can get that content anywhere you go? It's just a no-brainer for most people that have access to faster internet. Now, the only thing holding back that transition from moving along faster is live sports. And even that you can get now with streaming subscriptions. For example, I subscribe to my local sports team, the Los Angeles Lakers, through the Sportsnet app. So I don't need to have a cable subscription. I can just directly subscribe to my favorite basketball team and watch the games over a streaming subscription. And so that's lessened the reason to go with cable. And so that transition is happening, and that's going to be, on the one hand, good news for Disney, and on the other hand, it's going to be choppy and it's going to be messy. The reason it's going to be good news for Disney is because all of its content is going to be consumed more, right? If you can watch your content anywhere you go with your phone, then you're going to watch more content. That's just how it is, right? You have more access to content, you're going to watch it more often. So ultimately, Disney's content is going to be consumed more. However, in this transition where it's going from the cable to the streaming, that's going to be choppy and it's going to be messy. It's going to mess with its earnings. It's going to mess with the proportion of earnings from cable and streaming. And that's what has investors a little bit questioning and skeptical of Disney stock. And so they're just waiting for that transition to complete so that they can feel like, okay, now it's a clean business. Now we could get into the business when it's on this better path and it's not doing this whole messy transition. So depending on the progress in that path to streaming will determine the valuation of Disney stock going forward. I think that's the primary concern. The theme park segment, that's thriving. That's going to thrive in 2024. It's going to likely thrive for 2025 as well, as people make up for lost time. People were tired of spending so much time at home, and they're going out and they're unleashing that pent-up demand. Disney's theme parks, hotels, cruise ships, they're all thriving, and they're expected to continue thriving in 2024 and 2025. The big question mark will be the streaming transition. So my best estimate for where I think Disney's stock price will be in 2024 will be somewhere between $96 per share and $101 per share. So an increase from where it is now, but not a phenomenal jump from where it is now. However, I think the probability of that increase is high. I think that Disney's stock price will trade in a narrow range. It won't be a very volatile stock. It's not going to explode and double, but it's also not going to crash. It's just going to slowly improve as the management team transitions the business over. If you liked the video you just saw and you want to see more just like it, please subscribe to the channel. I can't keep this channel free without the support of viewers like you. And if you're already subscribed, thank you, and I appreciate your support.